Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Paul Bates. He's the dean at the DeGroote School of Business at McMaster University. Paul and I are going to talk about do-it-yourself investing. Paul, what does it take to be a successful do-it-yourself investor?
Time and attention, and a readiness to learn. There are so many different avenues that one can choose from, mutual funds to bonds, equities, different types of products, exchange-traded funds, all the way through to the more exotic, trading in options. You can do it all online, and you can do it quite successfully.
What about the knowledge? I think some people would have the fear that I'm going to blow my RSP up if I do it myself. How knowledgeable do you have to be?
You have to be fairly knowledgeable, and in fact, in my experience, most people make their first investment probably before they have enough knowledge. It's one of those situations where, as my dad used to say, when you're making something with woodwork, measure twice and cut once. The same thing applies here.
Investing's not an exact science either. Mistakes will be made inevitably, isn't that so?
It's absolutely so. And now, the good news is if you make small mistakes, you actually learn from them.
Even the pros do make mistakes.
Even the pros make mistakes.
Paul, what are the advantages of do-it-yourself investing? What you alluded to one before, low fees, and because you can do things online, but elaborate on that.
Very low fees.
How much lower? Give me a comparison of a discount brokerage stock commission versus a full service.
Oh, depending upon the type of relationship, type of account, sometimes as little as, say, 5 to 20% of the transaction cost at a full service advisory firm. Depends on the firm that you go through. These days you can trade literally for dollars to make a transaction. Part of it depends on how much additional service that you want. Is it strictly market access?
Because we should be clear, a discount broker or an online broker executes trades. They do not tell you what to buy, and they will not act as a sounding board.
They have libraries of information. They have access to other databases that you can access if you're buying mutual funds, for example, clicking through to organizations like Morningstar, rating services. These days, there's a huge amount of information.
So there's a lot of help out there, even though you're not being told what to buy.
Very much so.
Thanks a lot, Paul.
Okay.